Hey, what's going on, guys? So today's video is going to be all about credit scores, how to improve your credit score, how to have an excellent credit score, which may improve your life. It's one of those things that we all have to deal with in life, a credit score, this imaginary number that basically tells strangers whether you are responsible or not with money. It's not necessarily true. There's people with fantastic credit scores that are not responsible with money, and there's people with terrible credit scores that are very responsible with money. But when you're trying to borrow money from a stranger, they look at your credit score and they determine if they're going to give it to you. And if they are going to give it to you, that number determines how much extra you're going to pay. It determines your interest rate. People with bad credit scores end up paying a lot more money for the same products. And people with great credit scores pay very little interest and very little extra money because they're considered responsible people. So we're going to get into this. Before I do, I want to just give a disclaimer. I'm not a financial advisor. I'm not a banker. I am not someone who works in a credit bureau. I'm not actually in any position whatsoever to give advice on credit scores. But I am a guy who loves sharing his experiences here on the internet. I've been doing it for like 13 years now. Just telling people what's going on in my life and how I experienced different things. And I could tell you when I was a late teenager, I had a terrible credit score. And I wanted to go get a car at the time, and I was denied. They said, you're not responsible. So that's what first started my interest in credit scores and how it works. And I've studied the system, and many years later, I have an excellent credit score. I know generally how things work. And by the way, things have changed. Like if you try to get credit back in the 80s or 90s, it's very different. Like I have conversations about, credit with my parents and stuff. And, when they were younger, it was a different system and things did work a little differently. So even if you're older watching this video and you think you know about how the credit system works, it may have changed. It may be different than you think. So I have a little cheat sheet here just as a reminder to talk about some different things. These are all different, credit factors. There's a little chart showing, what's good, what's not good. But before I even get into this, I want to talk about this little line I have down at the bottom. No history equals thin file equals bad. So before I even actually get into that, let me just tell you the black and white of the situation is you only need a good credit score if you need to borrow money. Now, when you look at financial advisors such as Dave Ramsey, they will talk about how credit scores don't matter because his goal is to get people to become millionaires, right? So if you have a ton of money in the bank, that means you don't have to borrow money. If you don't have to borrow money, you don't need a good credit score. That's just how it works. You could buy stuff with cash and just, buy your way through life, whatever you want. As we know, the rich people of the world is certainly the minority, and most people are somewhere in the middle or on the bottom. And most people need to borrow money, especially for large purchases. The two most common large purchases, which you probably already know, buying a house or getting a mortgage, as well as buying a vehicle or getting a car note or car loan. Most people don't have a couple $100,000 to just go buy a house. Most people don't even have $30,000 to $50,000 to just go buy a car. So what do? We get loans. We pay it off in little chunks here and there so we can afford to own those eventually. And hopefully that's the goal, is you pay off your loan and then you actually own the product. So when you borrow money from people, generally speaking, it's a stranger and they don't know you and they don't know if you're responsible enough to pay it back. So that's why they look at a credit score. It's just a number that gives them an idea of whether you pay your bills or not, right? In today's day and age, we need credit scores for all kinds of things. Some people need a credit score when they go get a job. If you have a bad credit score, maybe that other person gets the job instead of you because on paper, you're not responsible with money, right? Whether it's true or not, doesn't matter. If you want to rent an apartment or a house, a lot of times they do a background check and they do a credit score poll to see if you're responsible. Because this person is relying on you to give them their money back. And that little number, or big number, lets them know if they're confident enough that they're going to get their money back. And if you have a really bad credit score, a lot of times you're just denied. Sorry, you can't have the job. Sorry, you can't live in this apartment. Sorry, you can't have this mortgage. Sorry, you can't have this car. It's just a lot of negativity and, of course, a lot of disappointment for people. And a lot of times people don't care until they get to that point. They don't care about their credit scores until that one day when they're sitting in a loan office somewhere and they get the big fat no. Then they start thinking, crap, I got to work on my credit score. But already it's too late. Now, the big takeaway for this video is going to be how to improve your credit score. Now, hopefully, people get financially responsible and they save a bunch of money and they buy everything with cash. But in the real world, a lot of people borrow money, including myself. I still borrow money occasionally. It's just convenient. So what I want to accomplish with this video is to give people the education information that I've obtained over the years and how I bettered my credit score. And if you're young, if you're a teenager watching this, you might not necessarily think you need a credit score because you don't yet, but you will. And this is something that you should definitely have a conversation about with your parents or guardians to better your future. Whether you need it right now or not, you should get started. It's the advice I always give young people. All right, so the first thing I want to talk about is, again, there's no history equals thin file equals bad. So when you don't have any kind of credit history, you never borrowed money, you have no credit score, that's also considered a thin file, okay? That is very bad because no history is worse than bad history, right? So there's an easy remedy to this, and I can tell you that when I married my wife, Christina, she had no credit history. She never needed to borrow money. She had no credit cards. It wasn't part of her life yet. So I guided her through this entire process to start having a credit score. And what you could do is you can go to your local bank and you can get a secured credit card. What that means is it's essentially a debit card. So what you're doing is you're giving money to the bank to keep in an account and they give you a credit card. Now, generally speaking, it's like $300 to $500, okay? So let's say you go in there, this is exactly what I did with my wife. We gave them $300 and they put it into an account and they gave her a credit card. And so if she did not pay the bills on that credit card, they would take that money and apply that towards the bills. It's considered secured because the bank doesn't have to worry if she was going to pay or not because the money was there. So if she put $300 in, that was her limit. She only had $300 limit on that card. If you put $500 in, you could spend up to $500. But like I said, if you end up not paying that bill, they just take that money out and they get paid either way. It's secured. There's no risk for the bank. So what happens is you run a secured credit card and about 6 months later, the bank will approve you for a regular credit card. As long as you're paying your bills, and I recommend paying in full at the end of the month or even before it's due. And that shows the bank that you're responsible enough to have a real credit card. So now you've not only started your credit history, and you will start with a number, but now you have a regular credit card that you can use, of course, to continue that. Now, there are a lot of factors I want to get into, obviously, in this video as we go on here, but that's the best recommendation if you have no credit history at all, is to get started. Even if you don't think you're going to need it in the future, you're wrong. You probably will. Unless you become a millionaire, you will probably borrow money at some point. Like I said, the big two is for a house or a car or for other things, or let's say you do want to get a credit card or something. That's why you need your credit history. That's why you need a credit score. I love having a good credit score and not using it. That's the best position to be in, is to have the availability to borrow money, but not need to borrow money. All right, so let's get into some of the basics here. If you don't know anything about credit whatsoever, here's a little chart. All right, this is going to show good credit and bad credit. All right, so starting at 300 to 629 is bad credit. That's a bad number. All right, 630 to 689 is fair. 690 to 719 is good, and 720 to 850 is considered excellent. Now, this chart changes depending on who you're talking to or what website you go to. I've talked to multiple bankers, multiple loan offices, and the general rule of thumb is 750 and above is considered excellent. This chart's showing 720, but once you hit that 750 mark, you're golden. It doesn't matter where, again, you have 750 or 820 or 830, they're all considered excellent. You're no less of a risk once you're past 750, okay? So that's the goal. You wanna get into the green and have an excellent credit score. Therefore, when you borrow money, you have bigger limits you can take out, bigger loans you could borrow with less interest, okay? You want your interest rate to be as low as possible because that's the money that you're paying extra for the chance to borrow it, okay? So if you're buying a car and you have fantastic credit and you get a 1.5% interest rate, you're only gonna pay a little bit of money, maybe $1,000, $1,500, $2,000, depending on what you're buying, compared to if you have horrible credit and you get a car loan and you have like a 8 or 9% interest rate or a 15% interest rate, you're paying thousands and thousands of dollars extra just because you're a risk. And that's wasting money, okay? So it's not a good position to be in. If you're gonna borrow money from someone, you wanna go in with a fantastic credit score. All right, so let's get into some of these different credit factors. What actually determines your credit score? What makes it go up and down? Now, I can say that there's different credit factors here, and they're not created equal. Okay, you can see the top three here are very important. The fourth one on the list here is just moderate, somewhere in the middle, and the bottom two have low importance, okay? So this has a lower impact on your credit score than these top three things. The top three factors are payment history, credit card usage, and derogatory marks. So I'll go through each one. Payment history, all right? This is very important. Now, this is the one thing a lot of people understand. If I borrow money, like let's say a regular credit card, and I owe $200 at the end of the month, and I just don't pay it, or I don't pay my minimum, whatever the case may be, that's bad. That's a bad payment history. All right, if you miss a payment for something, within 30 to 60 days, you have to pay that like as a back pay, or if it's delayed, that's still really bad and it can really affect your credit. But once you hit 90 days or above, you can go into collections, okay? So, you know, in the very simplest terms, if you're gonna borrow money, pay it back. It's really, really bad when you borrow money and just don't pay it back, especially if 1 month, 2 months, 3 months go by. That's when whoever you borrow money from is going to sell that debt to a collector. That's when you get all the phone calls every day. Hey, you got to give us money. You're going to get harassed, and you know, negatively impacts your credit the most of all things. All right. If you're borrowing money, you have to make those payments. I really suggest paying your bills off in full, but a lot of people end up paying like the minimum payment. So let me give you just a general scenario here. Let's say you borrow $100, you know, you put $100 on a credit card. You go down to Walmart, you buy toilet paper, paper towels, some food, whatever. You spend $100. Now it's on your credit card. At the end of the month, your minimum payment might be $35. You should be paying the $100. Whatever you owe, you should pay in full. But a lot of people don't. Maybe you can't afford it. Maybe you just don't put much priority on it. But you pay your minimum, your $35 minimum. Your credit score is going to be fine by paying the minimums, but you're going to keep paying interest on that debt that's owed. And the higher it gets, the more interest, the more money you're wasting. Borrowing money and paying minimums on all your cards is just a bad idea. All right. If you can't afford those cards, you should look into settling your debts and just not borrowing money anymore. It's just not good. So the second most important part that determines your credit score is your credit card usage. This is also very important. Under 10% is best, but under 30% is still good. So what this means is everyone has a debt to credit ratio. So let's say all of your credit cards combined, you have a $2,000 limit, okay? So you can spend up to $2,000. If you actually owe $2,000 every month because you maxed out all your cards, that's 100% credit card usage. That means you're using all of your credit. You do not want to use all of your credit. This is something that a lot of people don't think about. Some people do understand that you have to obviously pay your bills on time. That affects your credit. But a lot of people don't understand your credit card usage, your debt to credit ratio has to be really low, okay? They're saying under 30% is pretty good, under 10% is excellent. What that means is if you have $100 worth of credit, all your stuff combined that you could borrow is $100, they want you to only use $10. Now, of course, you can apply that to your specific situation. So let's say, to make it easy, let's say you have 5 credit cards. All 5 credit cards have a $1,000 limit. That means you have $5,000 available to you to borrow, a $5,000 credit limit, right? So if you use, I don't know, $2,500 every month of that $5,000 limit, you're using 50% of your credit that's available to you. That's not good. Because what that tells people is that you need that money. If you're using all of the credit that's given to you, you need that money. Therefore, you're a higher risk. You're constantly borrowing money. What they really want to see is you have a bunch of credit and you don't use any of it. You use this much. I could tell you right now, at the second of this video, I have a little over $100,000 in credit. I'm currently using about 1.2% of it because I just checked before this video. So what you want is a bunch of credit and no usage, but it can't really be zero because you can't get a good credit score by not borrowing money. And that's kind of the trick here too. Is in order to build your credit, you have to borrow money, but you only have to borrow a tiny bit. People think that like the more credit they use, the better the credit score is going to get. No, that might be one of those things that's outdated. Maybe back in the 80s and 90s, your credit score would be better if you kept borrowing money, but you don't want to. You want those huge limits, but a tiny, tiny bit of usage, okay? So if you have a card that has a $400 limit, spend $5 or $10 every month on that card and pay it off in full. Right? Go to the store, get a sandwich for yourself, buy something that's very, very cheap just to show that you're using those cards, because that's another thing that, not to get sidetracked here, But if you have a credit card account open and a year goes by and you're not using anything, sometimes they'll just close your account. Oftentimes they don't even let you know. Sometimes you get lucky, you get a letter in the mail saying, hey, you're not using this, because these credit card companies, they only have a certain amount of money to give out on limits. And the people who aren't using it, they just take it back from them. They just close your account. You do not want account closed, which we'll get into in just a minute here. So anyway, the credit card usage is very important. It's a factor a lot of people don't think about. If you have, again, a bunch of credit that's available to you, try not to use it. The less you use, the better. But it can't be zero, okay? Ideally, it'd be like 1%. But anyway, moving on. Derogatory marks. This is also very, very important. Derogatory marks can stay on your account for up to 7 to 10 years. This is, of course, anything that's just bad that goes onto your credit report. It's obviously very important to not have derogatory marks. If you go file bankruptcy or anything, it shows these lenders that you're not responsible with money. Therefore, they don't want to give it to you, and your credit score goes down. All right. Now, the next one is moderate importance. So it's pretty important, but not as important as these three. That is credit age. So on my notes here, I wrote, don't close your old accounts. This is super important. What lenders want to see is that you've had credit for a long, long time. If you just got your first credit card 4 months ago, they don't trust you. That's horrible, right? You have no history. They want to see history. They want to see consistency. They want to see that you pay your bills. This is what makes you a trustworthy, person that they can lend money to. So just for the sake of argument, for simple math, let's say you had 2 credit cards. One you had for 10 years. It's your only credit card. You had it for 10 years. And then you got a second credit card yesterday. Your average credit age is 5 years because it's both those cards combined, right? You take an average. So let's say you had 15 cards, it'd be 15 divided by the total amount of years all those cards, work together. So if you closed your 10-year-old card because you're not using it anymore or something, guess what? Now your credit age is a day because you just got that other card. That would be absolutely horrible for your credit, and your credit score would drop. Okay, so keep those accounts open even if you're not using them. It's just, not only is it going to give you a better credit age, but it's also going to give you more credit to debt ratio. Okay, so again, you want credit cards for many, many years, ideally, that you're barely using with a ton of credit. That's going to give you an amazing credit score. So the next thing is total accounts. This has a less impact on your credit score, but it's still important. All these are important. Now on my notes here, I put the more the better, 11 plus is excellent. I just happen to remember that. If you have 11 open accounts of credit or more, you're considered excellent. Now I know that sounds crazy for people to be like, wow, 11 credit cards. I mean, this is all open accounts. So like if you had 2 car loans, that counts as 2 accounts. If you have a mortgage, that counts as an account. Those are open lines of credit because you're paying off a debt. So as far as credit cards go, you want as many as possible. Now that sounds crazy because people think like, wow, if I had 25 credit cards, I'd have $100,000 worth of debt. No, if you have 25 credit cards, it means you have 25 credit cards. The debt is whatever you make it. I could tell you that I have dozens of credit cards. That's what helped me get an excellent credit score because I have all those lines of credit and I barely use them. I use all of my cards once a year, maybe 2 or 3 times a year, just to show some activity on there because you don't want nothing. You definitely want to show a little activity, but I literally have to rotate through because I forget, Now here's some advice I'm going to give you if you're applying for a new credit card, okay? Big advice, so listen up. If you're applying for a new credit card, avoid all credit cards with an annual fee. Now, if you have a bad credit score and your likeliness of getting a new credit card is low, those are the people that are trying to appeal to you. They're like, oh, we'll give you credit. It doesn't matter what your credit score is. We'll give you a $400 limit, but at a $50 a year annual fee or a $75 a year annual fee. You don't want any credit cards with annual fees because what that is that's money that's being thrown away just to have the opportunity to borrow money. Think about that. So let's say you look at a credit card offer that came in the mail and they're like, we don't care. You're pre-approved. We're going to give it to you no matter what, even though you have a horrible history. And for just $50 a year, we're going to give you a credit line. So now you're throwing away $50 every year. Even if you don't use your credit card, you have to give them $50. And usually when you have those cards, you don't get very high, credit limits either. Okay, those are marketed to lower income people with bad credit, bad history, because when they apply for other credit cards, they get denied. So I'm not going to spew off specific banks. I've had 2 of them. And about 3 years ago, I closed those 2 accounts. It's not good to close accounts. I went against my own advice. However, I refused to pay an annual fee anymore. So now all of my credit cards, none of them have annual fees. Once you work on a secured card and you get, your credit history and you start gaining and that number gets higher and higher, you don't have to worry about just being limited to those specific companies that are trying to pitch it to low-income people with bad history. That's what it is. It's a sales pitch. We're going to give you credit. It's going to be great. You don't pay your bills, but we don't care. You're going to get $50 a year. You're going to max out your credit card. We're going to get a bunch of interest. You're going to keep paying your minimums probably because that's what most people do. And the company's going to make a bunch of money off of you. Don't do it. There are plenty of credit cards out there. Even if you have a lower score, you just have to do your research. Look this stuff up, Google it. And you could see, there's different, companies now that are going to give you more information about your credit. They're going to give you the odds too. That's really nice these days. You can go to like NerdWallet and see different credit card reviews. They'll let people know, hey, if your credit score is this number, you're probably going to get denied for this card, but you'll probably be accepted for this card. Give you a better understanding of which ones to go with. But just like I said, at all costs, I would avoid any cards with annual fees. Now, because I have excellent credit at this point, and by the way, I'm not bragging about excellent credit. A lot of people have it. But again, the reason I have excellent credit is because I have a lot of credit available and I don't use it. I can't afford, if I use all my credit right now, $100,000, there's no way in a million years I could pay that back. Not even close. All right, so it's not a flex or bragging that I have a great credit score. I'm just telling you that's how I got it. It doesn't mean I can afford to use all those cards because I absolutely cannot, and I don't. And there's a huge amount of restraint that is needed. The reason that everyone's in debt in our country is because people have credit and they just use it because they want to. It's selfishness and greediness. If you can't afford to buy something, you should definitely not be buying stuff. But when someone says, hey, we'll give you a $2,000 credit limit, even though you probably won't pay it off, that's where things get really tricky, and that's where people suffer because they end up maxing out their credit cards and they can't pay them off and they're paying minimums for the rest of their life and they're throwing money away. So don't fall victim to that, okay? We're obviously consumers, especially here in America, but of course all around the world. We just love buying crap, and half the stuff we buy, we don't need. We're buying it because we're bored. We're buying it because we're jealous because other people have it. We think it's cool. We want stuff. We're just consumers. We consume and consume and consume. And if you can afford it, that's fine. But most people can't. So try to really be aware of what you're spending, your credit cards for. Do you really need that item? Do you really want that item? Can you really afford that item? It's fine if you really want something and you're okay with making a couple payments. Just understand that you're going to pay more money for it. If you're buying something for $100 on a credit card, especially, like my grandfather always told me, he gave me great advice. Never buy anything on a credit card ever that you won't see by the time you pay off your bill. So when you use your credit cards for dinner or gas for your car or something like that, it's just such a bad way to do it because you're paying your bill for something you don't even have anymore. You went out to dinner, you had a beautiful steak dinner, you ate it, you enjoyed it, you digested it, you left it in your septic tank, and you still owe that money. How crazy does that sound, right? But we're so used to doing it. It's no big deal, right? We're a country of credit and a country of debt. Now, of course, this is a moment where you have to be very honest with yourself. If you truly think that you can't control yourself, if you had 5 credit cards or 10 or 15 or 20, that you would max them all out, or you'd be spending money on stuff you can't afford, then don't get those credit cards. I'm giving advice for the people who want to better themselves and the people who want to make their credit score better. And in order to do that, you have to sacrifice and you have to have some restraint, so just keep that in mind. If you really can't trust yourself, then just don't do that. Don't get a bunch of credit cards. But having a bunch of credit cards and having a bunch of credit and not using it, again, is a sure way to improve your credit score and also save you money in the long run when you do borrow it. So anyway, moving on. The last one here is hard inquiries. This also has a low importance, but it is still important. Can last up to 2 years. Score drops usually bounce back after 3 months. All right, so what that means is a hard inquiry is anytime someone is looking into your credit. So if you go for a car loan, right? You go to the car dealership, you want to buy a car. That finance guy, usually he'll bounce around a couple different banks. He'll go to 4, 5, 6 banks to see who's going to give you the best deal. But keep in mind, every bank that he tries to get a loan, that's a hit on your credit. Boom, 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 boom. And most times those are hard inquiries. Now, sometimes you'll hear the term soft inquiry. That's where they can kind of look at your credit score without, I guess, it registering or knowing. They don't get all the details. It's a less effective thing. But a lot of times companies will promise that, like, oh, no credit score hit or whatever. That's what that means. A soft inquiry is a way for them to look at your credit score without your credit being affected by it. But a hard inquiry, like I said, that's a great example. Go to the dealership, you want to buy a car. They're trying to get you the best deal. They're getting a bunch of different banks to compete for you as a customer. But every time they run your credit, that's a credit hit. So like if you get a brand new car, you come home, look at your credit score. Look online. There's a bunch of services. You can check your credit score for free. Of course, everyone in America is owed a full credit report once a year. If you want to contact the credit bureaus, they can literally mail it to you. But today we have places like Credit Karma, and there's a bunch of other ones where you can just check online real quick for free. But those hard inquiries, they matter because they will drop your credit score. Okay, and like I said, they can last years on there. Generally speaking, softer inquiries will only last a couple months. Okay, they'll drop off. Your credit score will bounce back. So if you do go to apply for a loan or something, or even when you open a new credit card, if you open a brand new credit card today, you'll get a hard inquiry probably. Now here's also a very important note that goes back to opening as many credit cards as you can. You can't do that right away. If you apply for a credit card and you're accepted, you got to wait a little while. You can't just go apply for another one because it'll be like kind of a red flag in the system. You just applied for a credit card, so then the other company's like, well, you just got one. Why do you need one? And they're going to deny you. Okay, you don't want those. Those are, again, bad inquiries, hard inquiries that are going to be on your account. If you go to apply for a credit card and you get denied, that's also a bad inquiry. All right, so these are all different things to consider when you're looking to apply for credit cards or go for a loan or whatever the case may be. All right, so on the side here, I also have the credit bureaus, okay, and the different nationwide credit reporting services. So the big one that most people, when they pull your credit, most people are going to pull your FICO score. Your FICO score is generally the lowest score within all the scores, okay? So like let's say you do have like a Credit Karma account or something or one of those other services, they're probably going to show your Equifax, your TransUnion, your Experian. These are the big three you'll always hear about: Equifax, TransUnion, Experian. These all have individual numbers. Your FICO score is supposed to be some mathematical combination of these. But let's say your Equifax is like 700, your TransUnion 720, and your Experian 705. Almost every time your FICO score is going to be like 680. It's always a little less. So if you have one of those apps or something and you're looking at your credit score and you're like, wow, I'm at a 750 now. When they pull your score, if they pull in your FICO score, it's usually less. I don't know why. It just is what it is. You can usually get your FICO score for free. If you have like a Discover card, I know they offer it for free. There's other credit card companies that will give it to you when they send your bills or your mail. Also bank accounts. Certain bank accounts will give you your FICO score for free as well. So you don't have to worry or wonder what it is. You could check it. So let's say you want to go for your car loan and you want to go for a mortgage. You could look it up and see what your FICO score is beforehand to know if it's a good time to go do that and borrow money. Now here's some other credit reporting services. These are ones I've learned about over the years, but I don't know when it's applicable, when people are looking into these, but CSC Credit Services, Credit Technologies, Global Payments, Vantage Score, and Innovis are also ones that I hear about. But again, the big three, Equifax, TransUnion, Experian, and the one they're most likely pulling is your FICO. You can get lucky and you go to get a loan or something, or you apply for a credit card, they might just look at your Experian or just look at your TransUnion, just look at your Equifax. But like I said, FICO, for some reason, I found is used the most. Now, there's something else I want to talk about a little bit here. It could be very tricky. It could be really great for someone or really, really bad. Okay, so it's important you really listen to this part of the video if you're interested. But it is something called piggybacking. So one person could piggyback off of someone else's credit. What this means is that if someone has good credit up here and someone has bad credit down here, they can work off of their credit so that they can rise up. However, if you're doing this with someone who's untrustworthy and this person piggybacks on that person's credit and they do something bad, guess what? This person goes way down. They both go down, but this person gets totally screwed. So this is not something you do with your neighbor or your friend, and even in many cases, a family member. You know, people love their family and everything, and a lot of people trust their family, but your family can screw you over because they're just people. You know what I'm saying? You may share the same blood. Some people have great families, some people have not so great families. All right, so this is something that I did with my wife because I trusted her 1,000%. When we met, she had no history, as I mentioned. I had good history. I had good credit score. We got her secured credit card. Okay, her secured credit card she had for like 6 or 8 months, right? Got a regular credit card. Now she's on the board. She's got a credit score. I think it was like a 580 or 600, whatever it was. Okay. Then she started using credit, paying her bills on time or before in full. Her credit's going up. And when she was like around here, like, you know, very early on in this entire situation, I had her piggyback on my score and it boosted her. She went up overnight 60, 70 points or whatever, and then of course continued her journey. And when she had excellent credit, I took her off of my accounts. So this is extremely risky. It's not something you do with someone you don't trust 1,010%. I trusted my wife. It worked out great. But so many people do this. A lot of times it happens on accident. Like I said, a parent might give a teenager a credit card as an authorized user, or a wife to a husband, or a husband to a wife, or a husband to a husband, or a wife to wife. Whatever the scenario is, a grandmother to their niece or nephew, whatever. When you make someone an authorized user for your account, you're claiming all their responsibilities. You are responsible for them, 1,000%. So at this point, if you have decent credit or you're working on credit and you have an authorized user in your household, whoever it is, and they're not good with credit, take them off. Get rid of them off of your account. So their actions affect them only and not both of you. All right, so piggybacking is something that will definitely help you. Again, if you have a very trusted person in your life and you want to help them and they want to help you, whatever, but that should be used short term. That's it. You get in, get out, help them out, and that's it. You take, like I said, I took my little hit, then I jump right back up. No big deal. But that can get very ugly very quickly. It happens all the time. Friends do that. Like I said, family members that love and trust each other, but they're just not good with money, and it just drags the other person down that was trying to help them out. But anyway, that's something that was worth mentioning because it could really help people out there, again, if you have someone who you really trust. And by the way, you know, don't just take my word for any of this stuff. Google this, research it to death, spend hours and hours looking this stuff up. It's important for you to be fully educated on this situation. I'm making this video just to bring the idea into people's minds. If you're young and you don't have a credit history, start one. You know what I'm saying? Talk to your parents, talk to your guardians, really think about it. But it's a good idea. You don't have to use the credit, but you should be obtaining credit so you have a good credit score. So if you ever need it, it will save you money. You will have an easier time getting a loan. You have an easier time paying it off. You will have less money that you're wasting. Because when you borrow money from people, it's only because they're going to make interest. The only reason they're letting you borrow money is because they're going to make money. That's how it works, right? Otherwise, no one will loan anyone anything. It's not in good faith. It's not just to be friendly. It's not a charitable case. All these companies are making millions and millions of dollars on people who don't pay their bills. When you get a car loan, what they're really hoping that happens is that you pay off almost your whole car and then you stop making payments. So they got all that money, then they repossess your car, then they sell it and make even more. That's what they're hoping happens. They don't want you to pay off your car. They don't want you to pay off your mortgage, not the mortgage companies anyway. They want to repossess your home and get a bunch more money out of it. They're hoping you don't pay. However, they don't want to risk too much. If someone shows they're irresponsible with that stupid number that we call a credit score, then they don't trust you. So it makes it harder for you to borrow money, and it makes it way more expensive to borrow money. So having a good credit score is very beneficial, like I said, even if you never use it. It's one of those things, it's about being prepared. It's great to have, and hopefully you never use. So there's my advice on credit scores and how to improve your credit score. Like I said, it could be life-changing if you're a responsible person. Getting that car so you can get to that good job, you know, it could really change your life. It really can. Maybe you're looking to get your first home and you just don't have a good credit score. Work on it, because, you know, if you're committing to a 30 or 40-year mortgage payment, you could save so much money if you have a much lower rate. Same thing with a car. You could save thousands and thousands of dollars buying a car or getting a loan for a car if you have a good credit score. This is just something that we all deal with here in America. The credit system plays a huge part in all of our lives. And like I said, so many people, especially young people, you just don't care about it. You just don't talk about it. You just don't think about it until that one day when you need it and you don't have it, or it's not good. And now, again, you're playing catch up. You're behind the 8 ball, and now you have to wait and wait and wait to try to get what you want. Or you're just spending so much extra money for no reason. You're wasting it. A lot of us work very hard for our money. You do not want to give it away. Okay, not that easy. So again, do your own research, but I wanted to kind of get this in people's heads through this video that you can very easily improve your credit score, but you have to change your habits. So there you go, guys. Hopefully this helped you understand the credit system just a little bit more, and maybe it changes your life. Maybe you save a bunch of money. Maybe you don't. Maybe you watch this whole thing and then you go horribly into debt. I hope not. But I'm making this video to try to help people. It has really helped me quite a bit. Unfortunately, the credit system and credit scores, it's such a big deal in America today. And it's such an important part of everyone's life. And people don't even realize it. A lot of people don't even think about it at all. They might have a bad credit score and they go get a car and it's like no big deal. And they have a high payment and high interest. And you're wasting so much of your money by doing that. So by studying the system, and again, don't just take my word for it. Take everything that I've said today and research the heck out of it yourself. You know, look it up, confirm what I'm saying is real and confirm it's true. And better yourself by understanding this whole thing, because it is very much a part of our life. Like I said, it's not just about, you know, getting a credit card. It's about getting a loan for a car, getting a mortgage for a house. These are big life moves for a lot of people. And in some cases, like I mentioned too, it could be getting that good job, you know. Anyone can work retail. You can go down to Walmart and get a job with no credit history. But you want to get that good paying job, a lot of times they're making sure you have a good credit score because they want to make sure you're responsible. And you're just a stranger to them. And that imaginary number that this whole credit system creates is a big determination on what happens in your life. So you should treat it with a little bit of respect, even if you're not going to use it. Understand it. The more you know, the better. Anyway, that's it for this one. Hopefully this helped you out. Please feel free to comment, especially, you know, a year from now, 2 years from now, 5 years from now, a month from now. If this video affected you and you went out and bettered your credit score, I'd love to hear it. I'd love to hear the feedback. The biggest thing for me is really to tell people who have no history, it doesn't matter if you're 15 years old or 50, you know, get a secured credit card, get a credit score, get credit, but don't use it. It's the hardest thing you're going to have. Having a bunch of money available to you is very difficult, and most people fail. And that's why, like I said, people like Dave Ramsey and other financial advisors, they advise against credit cards because they know the average person is not responsible with money. You know, these people make millions of dollars telling people how to spend their money. I know it sounds crazy, right? But people just don't get it. I feel like at least in America, the school system failed us by not having a class on finances. I don't know why we spend so much time on grammar and cursive and math is super important, but like, you know, really advanced math, like trigonometry. Why? Why is there a trig class and no financial advice class? There should be a class in school, in every school in America, from 6th grade to 12th grade, telling you how to pay your bills, telling you how to open a credit card, telling you these life things that everyone needs to do. I've never used trigonometry outside of school. I never went to trig class either, so that's probably why. But let's say even geometry. I've used geometry maybe less than 10 times in my real life that I've really needed to. But guess what? I pay my bills every month. Why was I not taught that in school? It's crazy to me. Our educational system needs a little bit of an improvement. They need to start teaching kids in school how to live their life. This is basic life stuff. How to pay your bills, how to, you know, manage your credit. These are important things, and they're not teaching it. So I'm trying to do my part as an American to pass on the message. Maybe a couple teenagers see this video, maybe it helps them out, maybe they live a little bit of a better financial life because of it. That's worth all the time it took to film this. Anyway, that's it for now, guys. Hopefully you enjoyed this video. Hopefully it was a little educational for some, maybe entertaining for others, maybe a waste of time for people who just want to see another knife video. But either way, like I said, if it impacted a couple people out there positively, it was worth posting. So, and I mentioned I was going to do this for a long time now. Today I was thinking about it. I said, you know what? I'm going to sit down, have some talking points here, and just make it happen because it is important. It's an important part of all of our lives in America. And it's just good to know and understand how this stuff works. So anyway, that's all for now. Thanks for watching. Hope you guys have a fantastic day. And I'll see you tomorrow with a brand new video. Take care.